6 months ago, I did something that made half my audience angry and the other half confused. I took $50,000, split it perfectly down the middle, and put $25,000 into physical silver and $25,000 into Bitcoin. Same day, same amount, same starting line. Two completely different assets that two completely different communities will swear are the only real answer to a broken financial system. The silver community told me Bitcoin is digital nothing, a Ponzi scheme, a speculation dressed as a revolution, one EMP away from vanishing. The Bitcoin community told me silver is a boomer rock, a relic, a pet investment for preppers who think it's still 1975. One that's been going sideways for a decade while Bitcoin did 1000x. Both sides are passionate, both sides are intelligent, both sides are convinced they're right, and the other side is delusional. I didn't want to argue, I wanted to test real money, real assets, real results. And after 6 months of holding both positions, tracking every metric I could measure, and experiencing the reality of ownership on both sides, I have results that neither community expected. Results that challenge the narratives on both sides. Results that changed how I think about wealth preservation, speculation, and what money actually means in 2025. Let me show you everything. Let me start with the setup because methodology matters. On September 15th, 2024, I executed both purchases within the same 4-hour window. For the silver allocation, I purchased physical metal from 3 dealers. From SD Bullion, I bought 3 100-ounce bars at $29.87 per ounce for $8,961. From JM Bullion, I bought 250 secondary market 1-ounce rounds at $28.94 per ounce for $7,235. From Bold Precious Metals, I bought 20 10-ounce bars at $29.12 per ounce for $5,024. And I used the remaining $2,980 to buy 100 ounces of constitutional silver at approximately 21x face value. Total silver purchased 850 ounces. Average price paid $29.41 per ounce, including all premiums. Spot silver on September 15th was $27.84 per ounce. My effective premium was 5.6% over spot. For the Bitcoin allocation, I purchased 0.4128 BTC at a price of $60,567 per Bitcoin through a major exchange. I paid $25,000 and received 0.4128 BTC after the exchange fee of 0.5%. Which was $125. I immediately transferred the Bitcoin to a hardware wallet, a Ledger Nano X, that I purchased separately for $149. The hardware wallet cost is not included in the $25,000 allocation, but is worth noting as an additional expense of Bitcoin ownership that silver doesn't require. Both positions were established. The race was on. Let me give you the 6-month results because this is what you came for. As of March 15th, 2025, here are the numbers. Silver spot price, $32.18 per ounce. My 850 ounces at spot are worth $27,353. But I own physical, not spot. If I were to sell today, dealers would pay me approximately spot plus 0.50 for the bars, spot plus 1 euros for the secondary market rounds, and approximately 23x face value for the constitutional silver. Realistic liquidation value, $28,147. I invested $25,000. My return, $347 or 12.6% in 6 months. Annualized, approximately 25.2%. Bitcoin price, $83,400. My 0.4128 BTC is worth $34,019. I invested $25,000. My return, $9,419 or 37.7% in 6 months. Annualized, approximately 75.4%. Bitcoin wins. On raw returns, over this specific 6-month period, Bitcoin crushed silver by 25 percentage points. It's not even close. If you stopped here, if you looked at nothing but the returns, the conclusion is obvious. Bitcoin is the better investment. Silver is the inferior asset. Case closed, right? Wrong. Because returns are only one dimension of a multi-dimensional comparison, and the other dimensions tell a very different story. Let me walk you through every dimension I tracked because the full picture is far more nuanced than 2 numbers on a screen. Dimension 1, volatility. Over the 6-month period, I tracked the daily price movements of both assets. Silver's daily standard deviation was 1.34%. That means on a typical day, silver moved plus or minus 1.34% from the previous day's close. The maximum single-day move was 4.7% and 3.8%. Silver's largest peak-to-trough drawdown during the period was 11.2%, occurring in November 2024 when spot dropped from 31.40 to 27.88 over 9 trading days. Bitcoin's daily standard deviation was 3.87%, nearly 3 times silver's volatility. The maximum single-day move was 9.2% and 12.4%. Bitcoin's largest peak-to-trough drawdown during the period was 27.3%, occurring in late January when Bitcoin dropped from $92,000 to $66,800 in 11 days. That drawdown took my $25,000 position from approximately $38,400 down to approximately $27,900 in less than 2 weeks. On paper, I lost $10,500 in 11 days. I didn't sell, I held. But the emotional experience of watching a third of your position evaporate in a week and a half is something that numbers can't capture. The volatility is a tax, not a financial tax, a psychological tax. It extracts energy, sleep, and peace of mind. Silver's worst drawdown of 11.2% was uncomfortable but manageable. I never once questioned my thesis. I never once considered selling. Bitcoin's 27.3% drawdown made me physically nauseous. I checked the price 15 to 20 times per day during the worst of it. I questioned everything. I almost sold at $69,000, which would have locked in a loss. Let me put this in practical terms. If you have a $100,000 Bitcoin position, a 27% drawdown means you lose $27,000 in purchasing power in less than 2 weeks. If you have a mortgage payment, if you have kids in school, if you have any financial obligation that requires predictability, that volatility is not just a number. It's a threat to your financial stability. Silver at 11% drawdown on a $100,000 position means $11,000 in temporary paper losses. Still unpleasant, but far less likely to trigger panic selling or lifestyle disruption. Dimension 2, counterparty risk. My silver sits in my safe. 3 different product types spread across my home safe and a private vault. No exchange, no wallet provider, no network, no electricity required, no internet required, no software updates, no seed phrases to protect, no risk of hacking, phishing, or social engineering, no risk of exchange bankruptcy, no risk of regulatory shutdown. My silver exists independently of every institution, every network, and every technology on Earth. My Bitcoin exists on a hardware wallet. That wallet requires a 24-word seed phrase that I've stored in 2 separate locations. If I lose both copies of the seed phrase, I lose all 0.4128 BTC. Permanently, irreversibly. There is no customer service. There is no forgot my password option. There is no bank to call. The Bitcoin is gone, forever. If someone gains access to my seed phrase, they can steal my Bitcoin from anywhere in the world in seconds, no physical presence required. No getaway car needed, no forensic evidence left behind. If the ledger company is compromised, if a firmware update contains malicious code, if a supply chain attack introduces a backdoor into the hardware wallet, my Bitcoin could be stolen without my knowledge until I check the balance. Am I being paranoid? Ask the customers of FTX, who lost $8 billion when the exchange collapsed. Ask the customers of Mt. Gox, who lost 850,000 Bitcoin when the exchange was hacked. Ask the customers of Celsius, Voyager, BlockFi, and Genesis, all of which went bankrupt in 2022, taking customer deposits with them. Those weren't obscure, fly-by-night operations. FTX was the 3rd largest exchange in the world. Its founder was on the cover of Forbes. Counterparty risk in crypto is not theoretical. It is documented, repeated, and devastating. In 6 months of holding both assets, my silver required 0 attention. It sat in a safe. No updates, no maintenance, no monitoring. My Bitcoin required me to verify the firmware on my ledger twice, check that my seed phrase backups were intact once, and monitor news about hardware wallet vulnerabilities continuously. The cognitive load of securing Bitcoin is non-zero and ongoing. The cognitive load of securing silver is essentially 0 once the safe is installed. Dimension 3, liquidity and conversion. This is where Bitcoin has a genuine, significant advantage that I want to acknowledge honestly. If I needed to convert my Bitcoin to dollars at 3 a.m. on a Sunday, I could do it. I could transfer from my hardware wallet to an exchange and sell within an hour. The markets are open 24/7. The liquidity is deep, the spread is minimal. I would receive dollars in my bank account within 1 to 3 business days. If I needed to convert my silver to dollars at 3 a.m. on a Sunday, I couldn't. Coin shops are closed. Online dealers don't process purchases on Sundays. I would need to wait until Monday, drive to a dealer, negotiate a price, and accept their buy spread, which is typically 2–5% below spot for generic silver and 5 to 10% below spot for constitutional silver. The process would take hours, not minutes, and the spread would cost me more than Bitcoin's trading fees. In a genuine emergency, Bitcoin is more liquid than physical silver. That's a real advantage. I won't minimize it. However, there's a flip side. Bitcoin's liquidity depends entirely on functioning technology and functioning exchanges. In a grid-down scenario, in a banking crisis where exchanges are frozen, in a regulatory crackdown where crypto trading is restricted, Bitcoin's liquidity advantage disappears. Silver's liquidity is independent of technology. You can trade silver for goods in a parking lot, at a farmer's market, at a gun show, at a pawn shop, anywhere humans gather and recognize value. Silver's liquidity is primitive but indestructible. Bitcoin's liquidity is sophisticated but fragile. Which matters more depends on which scenario you're preparing for. Dimension 4. Privacy. This one surprised me. I assumed Bitcoin was more private than silver. The crypto community promotes Bitcoin as censorship-resistant and pseudo-anonymous. But the reality is more complicated. Every Bitcoin transaction is recorded on a public blockchain, forever. Anyone who knows my wallet address can see exactly how much Bitcoin I hold, when I received it, and every transaction I've ever made. Chain analysis companies like Chainalysis work with governments and law enforcement to trace Bitcoin transactions and identify owners. The IRS has specifically invested in blockchain analysis tools. If I sell Bitcoin on a regulated exchange, the exchange reports the transaction to the IRS. My Bitcoin holdings are traceable, trackable, and ultimately not private at all. My silver is invisible. I bought it from dealers, some with wire transfers that create records, but the metal itself has no serial number linked to a blockchain. Once it's in my safe, it's untrackable. No government database knows how much I have, no algorithm can trace its movement, no law enforcement agency can freeze it remotely. The privacy advantage goes to silver, and it's not close. Dimension 5. Regulatory risk. In 6 months of holding both assets, the regulatory landscape for Bitcoin shifted dramatically. The SEC approved spot Bitcoin ETFs in January 2024, which was positive. But in the months since, there have been congressional hearings about crypto taxation, proposed legislation requiring reporting of all crypto transactions above $600, and ongoing debates about central bank digital currencies that could compete with or restrict private cryptocurrencies. The regulatory direction is clear. Governments want visibility and control over crypto. They are building the infrastructure to tax it, track it, and potentially restrict it. Silver faces virtually no regulatory risk. There is no proposed legislation to ban silver ownership. There are no reporting requirements for silver transactions below $10,000 unless you're a dealer. The IRS taxes silver as a collectible, which is punitive, but they don't question your right to own it. No government in modern history has successfully banned precious metals ownership for an extended period. Even FDR's gold confiscation order of 1933 was widely ignored and lasted only until 1975. Silver exists in a regulatory environment that is stable, predictable, and favorable relative to crypto. Dimension 6. Intrinsic versus network value. This is the philosophical dimension that drives the deepest disagreement between the two communities. Silver has intrinsic value. It is the most electrically conductive metal on Earth. It is used in solar panels, electronics, medical devices, water purification, and dozens of other industrial applications. Industrial demand consumes over 55% of annual silver production. Even if nobody ever bought silver as money or investment again, it would still have value because it is consumed by industry. Silver cannot go to zero as long as technology exists. Bitcoin has no intrinsic value. It is valuable because people agree it is valuable. Because the network effect creates utility as a store of value and medium of exchange. Because its fixed supply of 21 million coins creates scarcity. Because its decentralized nature creates censorship resistance. These are real properties. They create real value. But they are network dependent. If the network loses participants, if a superior technology emerges, if governments effectively ban mining or trading, Bitcoin's value could theoretically go to zero. I'm not saying it will. I'm saying it could in a way that silver cannot. Bitcoin proponents argue that network value is more powerful than intrinsic value. They point to the internet, social media, and other network effects that created trillions in value from nothing physical. They're right that network effects are powerful, but they're ignoring that network effects can also reverse. MySpace had network value, it's gone. BlackBerry had network value, it's gone. AOL had network value, it's gone. Networks rise and fall. Gold and silver have been valuable for 5,000 years through every technological revolution, every political upheaval, every civilizational collapse. The permanence of metal versus the impermanence of networks is a risk that Bitcoin holders must acknowledge even if they believe the probability is low. Dimension 7. Energy dependence. My silver requires zero energy to maintain. It sits in a safe. No electricity. No internet. No servers. No mining rigs. No cooling systems. Bitcoin requires continuous, massive energy input just to exist. The Bitcoin network consumes approximately 150 terawatt-hours per year. That's more than the entire country of Argentina. If global energy infrastructure is disrupted, if rolling blackouts become common, if governments restrict energy use for mining, the Bitcoin network degrades. Transaction times increase, security decreases, the value proposition weakens. This is not an abstract concern. Energy grids around the world are under increasing stress from extreme weather, underinvestment, and growing demand from AI data centers. The assumption that abundant, reliable electricity will always be available to power the Bitcoin network is exactly that, an assumption. Silver doesn't make that assumption. Silver doesn't need to. Now let me share the emotional experience because this matters more than most people admit. Holding both assets simultaneously for 6 months gave me a direct, visceral comparison of the psychological experience. Holding silver was boring, wonderfully, peacefully, beautifully boring. I checked the spot price once or twice a week. The fluctuations were mild. The trend was gently upward. I never felt anxious. I never felt euphoric. I felt steady, grounded, like I was holding something real and permanent. It felt like savings, like patience, like maturity. Holding Bitcoin was exciting, terrifyingly, addictively, sleep-deprivingly exciting. I checked the price multiple times per day. The gains produced dopamine hits that I recognized as unhealthy. The drawdowns produced cortisol spikes that affected my sleep, my mood, and my relationships. I snapped at my partner once because I was stressed about a 15% overnight drop that happened while I was sleeping. I was irritable on down days. I was irrationally optimistic on up days. I was, for lack of a better term, emotionally enslaved by a number on a screen. This is not Bitcoin's fault. It's human nature. We are wired to respond to volatile stimuli. Gains and losses trigger the same neural pathways as gambling. And Bitcoin's volatility is engineered to maximize that response, not by design, but by the nature of a 24/7 market with no circuit breakers and no closing bell. There is never a moment of rest. There is always a price. There is always a trade happening somewhere. The market never sleeps, which means you never fully disengage. Silver let me sleep. Bitcoin kept me up. That difference has a value that doesn't appear on any balance sheet. Let me give you the final scorecard because I want this to be clear and honest. Raw return. Bitcoin wins. 37.7% versus 12.6%. Not close. Risk-adjusted return. Closer than you think. Bitcoin's Sharpe ratio over the period was approximately 1.4. Silver's was approximately 1.3. The higher return came with proportionally higher risk. Per unit of risk, the returns were similar. Volatility. Silver wins. 1.34% daily standard deviation versus 3.87%. Silver is 3 times less volatile. Maximum drawdown. Silver wins. 11.2% versus 27.3%. Silver's worst day was Bitcoin's average Tuesday. Counterparty risk. Silver wins. 0 versus non-trivial. Hardware wallet risks, exchange risks, seed phrase risks, privacy, silver wins. Untraceable physical metal versus public blockchain with government analysis tools, regulatory risk, silver wins. Stable, predictable regulatory environment versus evolving, uncertain, potentially hostile regulatory landscape. Liquidity, Bitcoin wins. 24/7 global markets versus business hours dealer transactions. Intrinsic value, silver wins. Industrial utility guarantees non-zero value. Bitcoin's value is entirely network dependent. Energy independence, silver wins. Zero energy required versus 150 terawatt hours per year. Emotional experience, silver wins. Peace of mind versus anxiety and addiction. Final score by my assessment, silver takes 8 dimensions. Bitcoin takes 2 dimensions. The raw return went to Bitcoin. The liquidity went to Bitcoin. Everything else went to silver. Now let me tell you what I'm doing going forward because this experiment changed my allocation strategy. I'm not selling my Bitcoin. The 37.7% return in 6 months is real money. The Bitcoin thesis that a fixed supply digital asset will appreciate as fiat currencies debase has merit. I don't dismiss it. But I'm changing my ratio. Before this experiment, I was 50-50 between silver and Bitcoin in my alternative assets allocation. Going forward, I'm moving to 75% silver and 25% Bitcoin. Here's why. Silver does the job I need it to do: preserve wealth, eliminate counterparty risk, provide privacy, and let me sleep at night. It does this with moderate returns and low volatility. Bitcoin does the job speculators need it to do: generate outsized returns with outsized risk. It does this with high returns and high volatility. I need more preservation and less speculation in my life. I need more peace and less anxiety. I need more certainty and less excitement. I'm not 25 years old with no responsibilities and a high-risk tolerance. I have a family. I have obligations. I have a life that depends on predictability. Silver serves that life. Bitcoin disrupts it, so silver gets 75%. Bitcoin gets 25%. My new allocation, 75% of my alternative assets budget goes to physical silver. Monthly purchases, dollar cost averaged, stored in my safe and private vault. This is insurance. This is savings. This is the foundation. 25% goes to Bitcoin, held on a hardware wallet, purchased monthly, and not checked more than once per week. This is speculation. This is a bet on technology and adoption. This is the high-risk, high-reward satellite position that I can afford to lose without lifestyle impact. If Bitcoin goes to $500,000, my 25% allocation will outperform everything else I own. If Bitcoin goes to 0, I lose a quarter of my alternative assets allocation, which is painful but not devastating. If silver goes to $100, my 75% allocation preserves my family's wealth through whatever crisis drove it there. If silver stays at $32 for another decade, I still own real metal with no counterparty risk and moderate inflation protection. The asymmetry works in both directions. Silver protects the downside. Bitcoin captures the upside. Together, they cover more scenarios than either one alone, but the weighting reflects my values, my life stage, and my priorities. Preservation first, speculation second. Let me address both communities directly because I know this video will draw fire from both sides. To the silver purists who think Bitcoin is worthless, you're wrong about the technology but right about the risk. Bitcoin is a genuine innovation. The blockchain is real. The scarcity is real. The adoption is real. But the risks are also real. Counterparty risk, regulatory risk, energy dependence, and volatility are not features. They're costs. Acknowledge them even if you choose not to own Bitcoin. To the Bitcoin maximalists who think silver is irrelevant, you're wrong about the metal but right about the returns. Silver has preserved wealth for 5,000 years. It has intrinsic industrial value. It has zero counterparty risk. It works without electricity. These are not trivial advantages. They're fundamental properties that no digital asset can replicate. Acknowledge them even if you choose not to own silver. The honest truth, the truth that neither community wants to hear, is that both assets have a place in a portfolio designed to survive what's coming. What's coming is monetary debasement, institutional failure, geopolitical chaos, and technological disruption. Silver protects against the first three. Bitcoin benefits from the fourth. Owning both in proportions that reflect your individual risk tolerance and life circumstances is not a compromise. It's wisdom. I put $25,000 into silver and $25,000 into Bitcoin 6 months ago. Bitcoin made more money. Silver gave more peace. Bitcoin was exciting. Silver was steady. Bitcoin required constant vigilance. Silver required a safe. Bitcoin could go to zero. Silver cannot. Bitcoin might go to 1 million. Silver won't. Both statements are true. Both assets have value. The question is not which one is better. The question is what you need. What does your life require? What does your family need? What lets you sleep? What preserves your wealth through the scenarios you're actually preparing for? For me, the answer is 75% silver and 25% Bitcoin. Your answer might be different, but at least now you have the data. 6 months of real money, side-by-side comparison. Every dimension measured. Every trade-off documented. No agenda. No sponsorship. Just what happened when I put skin in both games and paid attention. This is JonCashFlow, silver versus Bitcoin. I tested both with real money. Now you have the results. Make your own decision, but make it with data, not tribalism. And I'll see you in the next one.